Hello, today is Thursday, June 4th, 2026. Here is your daily signal. According to the Associated Press, tensions between Iran and the United States have escalated, with U.S. forces bombing Iranian radar and drone sites after Iran shot down an American drone and targeted U.S. soldiers in Kuwait with missiles. The conflict, described by Fortune as the trigger for the largest oil supply disruption in history, has Gulf states now racing to invest billions in renewable energy projects. The background to this crisis includes a cycle of retaliation, with Iran's missile strikes against American soldiers stationed in Kuwait following the U.S. airstrikes in Iran, creating a climate of heightened military confrontation and regional instability. Both Saudi Arabia and the UAE, along with other major Gulf oil exporters, are urgently evaluating energy diversification after these disruptive attacks on oil infrastructure. As a result, oil markets are experiencing unprecedented volatility. Fortune notes that the Gulf's response has been swift, with massive investments in renewables under consideration. The immediate effect has been sharply rising global oil prices, which are already starting to impact economies dependent on both oil exports and imports. In the medium term, the Gulf Cooperation Council is expected to fast-track sprawling renewable energy initiatives, potentially reshaping the socio-economic landscape of the region. Ongoing fighting risks further supply chain shocks and deeper energy market instability worldwide. Fortune reports that property prices across all segments of Dubai's residential market have fallen sharply, driven by the ongoing war's broad economic impact. Since May 2026, Dubai's economy has faced significant instability as investor confidence has been undermined by the conflict, with real estate transactions disrupted and nervousness spreading among global buyers. Traditionally one of the most sensitive property markets to regional turmoil, Dubai's real estate sees companies like Emaar Properties and Damac Properties directly affected, while international investors and the Dubai Land Department track every move. The latest figures confirm that price declines are broad-based, deepening fears that this may be more than a brief dip. If the instability persists, industry analysts highlight that international capital inflows may continue to dry up, liquidity could be compressed, and developers might postpone or cancel major new projects. In addition, rental yields, a major draw for foreign investors, could diminish, causing a potential ripple across the entire urban property ecosystem. TechCrunch reveals that Alphabet, the parent company of Google, has announced a plan to raise an unprecedented $80 billion to fund its ambitious artificial intelligence build-out. This move underscores the escalating financial arms race among tech giants vying for AI leadership, where the costs of data center expansion, specialist recruitment, and custom hardware have skyrocketed. The competitive landscape includes other major players such as Microsoft, Amazon, Meta, and Apple, all of whom are accelerating their capital investments to secure a foothold in next-generation AI. According to TechCrunch, Alphabet's fundraising effort is emblematic of a new paradigm. Only those with massive resources can afford ongoing breakthroughs, further intensified by recent statements from company leaders like Sundar Pichai. This capital-intensive push is likely to heighten volatility in capital markets as investors digest the sheer scale of Silicon Valley's appetite for funding. In the near term, barriers for smaller startups may rise sharply, making it tougher to enter the AI market. If the pace of AI deployment continues, as anticipated, we could also see rapid disruption across cloud computing, search, and enterprise software, potentially forcing regulators to step up their scrutiny of big tech's growing influence. Now, onto the markets. International markets saw mostly modest gains, highlighted by the Netherlands with EWN up over 1%, while China large cap slipped slightly, reflecting a minus 0.1% move in FXI. Commodities were mixed. Gold advanced with GLD up 0.76% and platinum outperformed with a nearly 2% gain in PPLT, while oil tumbled, with USO dropping 3.7%. In U.S. sectors, healthcare led with Roman 45 soaring 2.7%, while semiconductors led as stocks fell nearly 1.9%, and SPY edged up to close at 756.99. Among individual stocks, Ceridian Technology SDI surged an extraordinary 289%, registering today's top gainer, while Hub Cybersecurity Hub plunged over 69%, making it the leading decliner. That's it for today. You can find more news and details on our website. Goodbye.